And Malcolm, this is the busiest earnings week of the season. We've got about 40% of the S&P 500 reporting this week. Steve just talked about how profits are getting squeezed, operating margins are getting squeezed. What else are you going to be watching for in these earnings reports?
Yeah, so interestingly enough, I think the real action will be the revisions that come following Q2 earnings or the lack thereof. I think that'll be pretty telling, right? If you think about Q1, when we got significant revisions immediately after Q1 earnings from Microsoft and Best Buy, as an example, that kind of told us what we were in for the preceding time before Q2 earnings. I really think that that's what we're looking at now, where if we see a lack of revisions come out after Q2 with, sort of downbeat earnings projections from CEOs today, I think that that'll tell us maybe we're at the peak of this bad news cycle, and maybe that's a good indication to investors that maybe you can start to work your way back into the markets and expect to see a little bit smoother sailing, toward the end of the year.
That would be the all clear sign for you?
I would think that it's, at least for, more aggressive investors, I would think that that does spell this is a good time to be in the market.
The other issue we've been talking about is whether or not we're in a recession. Joe made the point earlier this morning that it's hard to say you're in a recession when you have such a strong jobs market, but we will be getting some hints from CEOs on some of those issues, too. You've heard big companies like Microsoft and others say that they're going to slow hiring.
Yeah, so I heard you guys initially talking about fuel costs coming down as sort of a good sign, right? And layoffs and slowing down hiring is a good indication. But I think with housing being such a big portion of the CPI figure and all of this being tied to CPI, all of this being the Fed action being tied to CPI, housing accounts for 1/3 of that, and the cost of a mortgage or even OER has risen, significantly since the start of the year. So I'm afraid that we haven't really seen the peak of anything just yet, even at a 9.1% print last month. And so the focus for me really has to be on housing. It's a significant enough portion of those currently renting and want to purchase are finally able to. That would help calm those housing supply versus demand concerns in a meaningful way, right? So I'm concerned by the latest home builder sentiment numbers showing a drop of 12 points. We're already behind by 5 million homes as it is. And one of those reasons for that deficit is because the home builder sentiment was so low coming out of the Great Recession, and they didn't resume building at normal numbers for, I think it was like 6 years immediately following the Great Recession. So to me, that's where we really have to focus our attention more, telling us whether, we're headed into recession, already in a recession, how much more prolonged this thing is going to be. To me, housing is where the action really is.